The price of gold is still glittering while stock markets tumble, so is it the best hedge against volatility? This is Sectors Up Close, and we're talking metals. Spot gold hit a new record high of $3,167 on Thursday as stock markets around the world began a sell-off sparked by President Trump's tariff policies. That has knocked nearly $6 trillion in market value from Wall Street, but gold held steady on Monday as the slide in other assets gained pace. Well, Ewa Manthey is a commodities strategist at ING with a particular focus on metals markets. Ewa, is gold proving it's still the ultimate hedge?
Yeah, we saw metals prices really tumbling over the last week, and gold took a hit too. And we saw prices tumbling from that record high we saw it had reached earlier last week. And typically gold is a safe haven in times of heightened uncertainty. But sometimes what we see is that investors would sell gold with other asset classes to raise cash to offset those losses elsewhere. So we think this volatility in gold prices and this drop in prices will be short-lived. And we see prices continuing to move upwards looking into the rest of the year.
We've seen central banks, including in China, adding to their gold reserves in recent days, haven't we? What impact does that have on the price?
So the buying by central banks has been one of the key drivers for gold rally last year. And we see this continuing this year as well. So China just announced its central bank bought gold again in March, and we think this is likely to continue. And in Trump's first term as president, we saw China central bank adding gold for about 10 consecutive months. And the fact that China is buying now when prices are at record highs is a positive signal for prices as well.
Do you think in times of market volatility like this, there's still a role that only gold can play as a safe haven?
Yeah, definitely. So we are still very bullish on gold prices, and we see the rally continuing. Looking ahead, and the main factors that will drive this rally will be central bank buying, Trump's unpredictable trade policy as well the rising holdings in gold ETF.
What about industrial metals like copper? Some of them, of course, steel and aluminium, have been hit with tariffs themselves, but even those that haven't have been caught up in the crossfire between the US and China, haven't they?
Yeah, exactly. So we saw the prices for industrial metals really taking a hit last week. And it seems really that over the weekend, it really did little to ease this bearish sentiment in the metals complex. And we're seeing risk aversion intensifying. Global fears are taking over the narrative for metals markets as well.
Copper is often seen as a marker of economic health globally. Citi now think that price could fall down to $8,000 as soon as this week. Is that likely, do you think?
So for copper now we're seeing all year-to-date gains being erased last week. Last week was the worst weekly loss for copper prices since March 2020, which was during COVID pandemic. And yeah, as you're saying, copper is widely seen as a proxy for global growth. So the prices are getting hit as markets are pricing in something like a global recession. So this copper pricing falling is one of the clearest signals that there are concerns over economic growth.
That was Ewa Manthey of ING. Don't forget, you can watch more videos on Reuters.com.